I'm glad to be today with Duncan Moir, the president of 21Shares. So we're discussing before about different things around ETPs and ETFs. The first thing is in less than a year, Bitcoin ETPs has been nearly approaching 70% of the GLD volumes.
Yeah.
So before we go back to your background, maybe can you explain why this has been super successful?
Yeah, I can give it a go anyway. I mean, it's phenomenal the growth that we've seen in ETFs in the US since their launch. Like, I think that just tells you about the pent-up demand there was in the US, which as a country was fairly restricted from allocating to crypto when we look at other markets who are a bit more mature there. So great indication of the early demand. And I mean early, I think the most interesting thing to me is this is just the tip of the iceberg. Genuinely, the US has a $40 trillion maybe pension fund market that's not even barely allocating to this space. So so institutions have come, but they're still to come yet.
Right. And a big part of that volume are coming from banks, essentially, such as Goldman Sachs.
Yep.
Can you explain a little bit more why Goldman Sachs is the first holder in that category?
Yeah, for sure. I think that got everybody excited, right? Like to see a big name like that. Great validation for institutional adoption. What I would say is that tends to be, particularly in the case of Goldman's and some others, tends to be like the prop desks who are more trading crypto. It may not entirely be that, but that can be a good chunk of the volumes, which in itself is very important for crypto, because the more that we have those types of investors trading, the better the liquidity is, the tighter the spreads, and it's just generally better for everyone. But just having that name, like big bank, big brand name in the space, helps overall anyway.
Right. And I would love to understand how 21Shares differentiate on having a better product, tighter spreads when market is up, but also when market is down
Sure.
with lower volume. But before that, I would love to understand, how did you find crypto? What is your background there? And how did you end up in 21Shares?
Okay. It's a long story, but I guess the short version is like I spent my career in asset management. I worked for a Scottish. I'm Scottish, right? If you can't tell by the accent, I worked for a Scottish asset manager for the majority of my career in hedge funds. So I was a hedge fund investor, ran a multi-strat hedge fund, and that's how I got into crypto, because the hedge fund started to trade crypto around about 2016. Is when kind of I first got introduced to it, and then I would have loved to allocate. A business like ours was not in a position to do that at the time, so quickly pivoted to looking at the underlying technology, blockchain technology, and could see very clearly, especially coming from hedge funds, where they tend to be at the forefront of new kind of investment solutions or asset innovation, but they're actually very clunky in the background, in the back office, in the middle office. I mean, many today you still fax subscription documents to them. So it was very clear that something like blockchain technology could be used to create real efficiencies and make the whole user experience from an investor's perspective much more streamlined. And then just it built over time. Eventually convinced my previous employer to build out a digital asset business. So that was at Aberdeen, and led that until I joined 21Shares at the beginning of the year. And really because I wanted to go focus 100% on crypto in a company dedicated to the space. And 21Shares was, and still is, the brand name in crypto ETPs. and crypto investments, and it seemed like a great match.
And you also passed through a foundation, protocol itself, Hedera, if I'm not mistaken. Why Hedera, and what got you excited there?
Yeah, so, well, I mean, when I was at Aberdeen, we were doing tokenization, and we needed a protocol to tokenize on, and we did our due diligence, and we ultimately selected Hedera. It has a lot of great features, one of which is the governance structure of it. So it is governed by up to 39 large corporates or organizations, global companies across many sectors. And we like that because it was the safeguards that having these large companies running the network provided. And actually, probably it's misunderstood, extremely decentralized, because it's equal votes across all companies, and it requires, more than a dozen large organizations to collude just to make, changes, which is highly unlikely. So we selected that technology, and then I just got more involved with the company. I represented Aberdeen on that kind of governing council of the companies running a node. So we decided to run a node on the network, and then from there I was appointed to the board. So my time with Hedera, actually, it overlaps both Aberdeen and now. I'm still a board member at Hedera Hashgraph LLC.
And do you feel it helped you understand new protocols better, or emerging protocols, because Hedera is quite a approved tech and project, but still it's not part of the top 10 coins. So do you, as 21Shares has the largest offering, do you feel it helped you?
Do you know what it helped me? So it helped me understand the inner workings of blockchain as businesses as well, because they are. I mean, look, okay, Bitcoin aside, maybe a little bit of Ethereum aside, the rest of them they're operated like companies. They have cash flows, they have operating costs, they have revenues, headcount, overheads. So it definitely helped me understand the inner workings more, the technology aspect for sure. But probably the biggest kind of areas of learning for me was getting to work with companies in other sectors. Just because that governing council was made up of companies all over the world, in different sectors, you learned from how tech companies think or industrials companies think about the use of blockchain. And great foundation when I still spent a lot of time with other protocols both at Aberdeen and obviously now 21Shares. I think it's good to have some sort of benchmark when you're looking across the universe of what's out there.
That's great. That's cool. And it's fascinating. You're still part of the board there. I wanted to come back on ETPs and ETF products in the US. What do you see as a pattern of users in Europe? In the US, are they different users, different customers? Who are these ETPs or ETF holders?
Yeah, I mean, I would say that just because in Europe they've been around for much longer, it's a more mature market. Obviously, in Europe, we've been able to. I mean, we have probably more than 40 products in Europe today.
That's very impressive.
Thank you. I mean, that's I guess that's one we are to that. Yeah, that's what that's kind of our MO. The investor base is different. So today in Europe we are roughly 50-50 retail and institutional. So that institutional part of the pie is definitely growing. Actually, who knows? It could move the other way just with the recent developments in the UK. So the FCA announcing that they're going to. I mean, the way they said it was, we are lifting the ban on UK retail for crypto derivatives or crypto ETNs. There's a consultation out, but we do expect that to then result in that ban being lifted. That will bring the 2.4 trillion pound UK retail market on board as well. So could bend towards retail again. But
And in that regard, do you expect more retail coming
100%
out of this?
Yeah. I mean, like when the US spot ETFs were launched and there was all the fanfare, and, you know, obviously our product was successful. BlackRock's extremely successful. UK brokers were getting a lot of inbound requests from clients wanting to get exposure to it, even though the European ETPs have existed for much longer. But the media coverage really resulted in that. So we know that there's a lot of demand. We know that brokers want to offer it. We've seen some brokers start to actually introduce the professional investor categorization, so they could give some investors exposure. And that's a headache. That's a big undertaking, client's undertaking. So they know that the value, that it's worth it. So
They were motivated.
Oh yeah, big time. So I think UK retail investor will be a big investor. There's a question mark on what London Stock Exchange will admit. So which products they will admit to the exchange. But even if they don't, the investors will get their exposure from Europe. So I'm very bullish on that, and very excited about it. But in continental Europe, that, as I said, that institutional kind of part of the pie is growing, and it's a mixture of so we have prop desks, we have hedge funds, we have family offices, we have wealth managers. We're just starting to see pension funds and insurers come in, which is like great validation. Yep, amazing. Even in the UK, it was fairly well publicized. The first defined benefit pension fund allocating to crypto 3% of their portfolio, which is, I mean, it's a great sign. And they went direct as well, which is really interesting. So there's a higher hurdle to do that.
How would they spread in that case? Would they do like 70-80% Bitcoin Ethereum and then 20% altcoin?
My understanding is they only did Bitcoin. In that case, and they were advised by a pension advisor called Cartwright, who have done a great job kind of on education in the space. But for our investors in Europe, the ones that have been with us the longest, they're very sophisticated. Like, I mean, they tend to be the ones most interested actually in some of the newer projects that we are, and products that we're launching. Of course, they trade the blue chips, but they tend to be the allocators to the initial allocators to many of the new products that we launch on much smaller projects.
That's right. Interesting. And in the US, do you see a different spread there? And
yeah,
how do you see the US evolving?
Yeah, so for us, it's predominantly like that retail trade. I mean, that won't be the case for everybody. It kind of depends on your distribution model. We have a great partnership with ARC, so Cathy Wood's firm, and so we benefit from their distribution channels, which tends to be that kind of financial independent, financial advisor, RIA model. But the US is still evolving, that market maturing. I would expect to see there has been some announcements around university endowments allocating. I think we'll see more of that. Endowments, foundations, family offices, and pension funds. There's some barriers for sure, but that will come eventually.
Right. One, I guess, to the geographical spread of the company, it seems you have 3 offices, one in Zurich, London, and New York. How big is the team? How are offices spread, and what is where is the biggest of your efforts these days?
Sure. So at the beginning of the year, we separated, or the founders of the company separated the 2 entities. So we have 21Shares, which is the asset manager, the kind of the name that people know. That's the one that I work with, and then 21 Co Technologies, which is a tech business run by the founders, and we all share office space. In the asset management company, we're about 80 people overall across the different those 3 offices. We have a few people working remotely, but interestingly, New York now has become our largest office, which I think tells you a bit about the trends that we're seeing and the opportunity in the United States. And it's, frankly, it tends to be a more expensive place to hire into, but we see the value in hiring in there, and there's amazing talent in New York as well. Like I think we're going to probably grow that more. We're still are hiring in Zurich, and then we need to think about what's next and where's next, because great opportunities in the US, as I said, but there's a whole world out there, right? And there are many more markets opening up in South America and in Asia as well that I have to think about.
Right, and you're traveling quite a bit in these places. In fact, you're going to be in the US later this week. So
yeah, I'm traveling a fair bit as my colleagues. So I joined with the founders kind of stepping away. I joined with the management team to kind of take over the businesses. So our CEO, our COO, we're all kind of tends to be on the road a fair bit, but it's good.
Yeah, I can relate. Actually, right, I'm also a bit on the road. Posing or maybe zooming on the US, if you look at Ethereum volume ETFs versus Bitcoin, it hasn't been as successful.
No.
I think I checked volume this morning. We're talking like 20 times less successful than what Bitcoin is.
Yeah.
What do you think that is? What do you think investors in the US are less inclined to be exposed to Ethereum ETFs?
So I think like as a brand for the people that are not in the crypto world, Bitcoin is far superior. It's just far better known. I mean, you had US election, you had Trump at Bitcoin conference, right? Not Ethereum conference. So that's what people saw. That's what people saw in the news. That's what people knew. And at the end of the day, it is the proxy for the crypto industry, and it's the first natural place for anybody to come into. So I'm not surprised that the retail money went into the Bitcoin ETFs, and they were first, right? So if you were going to allocate to crypto and you had a set amount, you didn't know what else was going to be out there. You've allocated your pooled money to there, and then you've got a great run in performance since then, and you don't want to create a taxable event. So why sell some into it to go into ETH? For the institutional investors, so the hedge funds and the prop desks that we've discussed already, a lot of them are playing the basis trade. And so basically, you're long the ETF, or the ETP, and you're short the future, and the break evens on Ethereum just it tends to trade closer to break even. So it's just not as an attractive a trade as Bitcoin is for the basis trade, and as a result, you just haven't seen the amount of trading. A lot of people talk about staking. I do think staking has something to do with that, because when they want to play the basis trade, they'll often go into European products, right, which can do staking. Obviously, we do it.
They will gain on these couple of percentage points to actually put it in the basis trade.
Exactly, and everyone does it differently. And there are right? Not all staking is created equal, sort of, or so. They can be very clever about how they do it. They're a little bit more restricted with the US products today, but that's going to change, right? The staking is coming.
Staking is coming?
Yeah. My expectation is that's the indication staking is coming.
And I mean, just by the way, in Europe, would you, when a coin is stakeable, would you always offer it with staking? Is it the superior product you think, or sometimes?
Yeah, generally speaking, yes. I mean, it would depend on the thing about the ETFs and ETPs is you always have to maintain the liquidity, like enough liquidity to meet redemption requests. So it would depend on the asset and the kind of bonding, the lockup period that is required. So the longer, and this is what has been one of the limitations of ETH, because that bonding period is or unbonding period would be longer than some other assets. So you cannot stake as much. Your utilization rate would tend to be lower than, let's say, something like Solana. So that would, it would depend on how much liquidity is there exists for on the staking part to allow us to then go and do it.
And do you think this bonding period will influence, potential approval of staking by the SEC?
Good question. I think issuers will need to explain how they're going to manage that risk for sure. Whether the SEC takes a view on whether something is suitable for staking or not, based on its unbonding period, I don't know. Generally the regulators set rules or the boundaries within which asset investment managers may operate, and the investment manager is then relied upon to make the sensible decisions. So even the same exists in Europe. You say like a UCITS fund needs to maintain X amount of liquidity. It's up to the investment manager to figure out to make sure that they do that, and they don't go into stuff that's not illiquid, even though it may be a permitted instrument.
Right. So you said prior to the regulator, and then you have just to assume the ratio unliquid or staked versus
that's kind of how it is in Europe, and I would hope that it's going to be the same in the US, but with time will tell whether that is the case. I just think that putting very very detailed restrictions may not give them the outcome that they want.
Right. And thanks. I mean, this is kind of like the backbone and the back end of how do you do a staked ETF.
Yeah.
I could definitely ask you like what exactly that it's
what it is. I mean, you must have a view on this as well.
Well, yeah. I mean, we see splits where it's sometimes 50-50. In fact, even in Hong Kong, I think the regulator capped the stake amount to 30-40%.
Okay.
Which is quite low.
Okay.
Which makes the product much less attractive.
It probably explains why some of the their flow into European products then.
That's right. Yeah, that's right.
From Hong Kong.
From Hong Kong. Yeah. And happy ETH staked ETF folks from Hong Kong going to Europe. And I guess in Europe is I would say it's potentially the opposite, right? Like you see 60-70% of assets that are staked and 30-40% that are liquids to fulfill redemption requirements. But one thing I wanted to ask you is about your coin coverage, because I think, to my understanding, you have the largest coins coverage as an ETP provider in the world, more than 40 products, from Ondo to Aave to Hedera to Tron, if I'm not mistaken, or at least Ton, that's for sure. How do you choose these new coins and these new ETPs products, and how do you manage all these products?
Yeah, it's a big undertaking, and so we have a bunch of like everything from like the blue chip to the like nascent projects. I mean, we have to be somewhat careful about what we can, and restricted in what we can bring in, because they have to be approved by the regulated securities exchange. So we need approval from SIX Stock Exchange or Xetra or Euronext for the underlying asset to make it into a product. So there's some hurdles there, but we try to be as early as we can in projects. And the way that we can manage this is by having the biggest research team in the business as well. So we have a great team of real crypto natives. They love this space. I mean, this is their passion. This is what they do. My research team, they're the ones that on their vacation they go to crypto events. It's like that. That's what they're doing.
And I can testify.
Okay, yeah,
I see some of them.
So
I didn't know it was their vacation.
Yeah. Okay, I mean, we will send them for work, but if we don't, they still go on vacation there. So it's which is great if they love what they do. Spend a lot of the time just playing around in DeFi as well, learning. But we have a fairly structured due diligence process for all the different assets that we cover. Our research capabilities really go beyond the core research team. They also include our capital markets team, who are the ones responsible for that liquidity and on the products. They understand a lot of the technicals. You guys know them really well. They understand the staking part of the business, and even our content team in marketing are financial, actually both the crypto financial journalists by background. So they understand a lot of the market as well. So research do everything from the due diligence on the underlying tokens to producing a lot of the content and the messaging around our products, the narrative, the investment thesis, to education for clients,
Right.
and spending a lot of time face to face with clients.
So I guess you look at the team, the project, where does it come from, the business opportunity for you, the appetency from clients as well.
Yeah, exactly. You've basically gone through our due diligence report almost. So we do separate the token from the product. So we look at token. So we get like the team, I don't know, consensus mechanism and its staking elements, risk, governance, and then we look at the product and it's the value proposition for the client, and liquidity and things like that, all the infrastructure support for the asset, and we try to keep them separate. The research basically have to have a veto on anything that goes into a product. So it's important that they can maintain that kind of independence.
Great. Conscious of your time, because I think you have to hope on a cap.
I'm relying on you here, so always keep me here.
Yeah, I want to make sure you get your cap on time. So maybe one or two opening questions first. It seems to me that ETF are taking products on chain with a wrapper that is more understandable from the average investor, which makes it successful and widely used. But there are products that actually, funny enough, do the opposites, which takes off-chain digital assets and financial assets and put it on chain and distribute it on chain. And I'm thinking, for example, of BIDO by BlackRock, money market fund, off-chain and tokenizing it and distributing on-chain. Is it something that you have been looking at? Is it something that you might think of doing in the future?
Well, I can say that in my prior role, that was that was life. I feel like tokenization was life back then, and we also did the tokenized money market funds, and in much of the same way as BIDL has been done actually. It's not something that we're looking at right now into something like that, but what we could consider is, to the extent that we want to offer more like multi-asset products, where we're, like we already do this. We think Bitcoin and gold work really well together. So we have the Bitcoin gold product that uses physical gold. But if, to the extent that we're going to mix, I don't know, gold with equities or bonds, we may want to use tokenized versions of those. We keep all of the same kind of infrastructure partners as well.
Fractionalize the gold much in a better fashion.
Yeah, exactly. So we are like tech stocks or something like that. We probably want to use tokenized assets, and then we can keep we have our digital asset custodians, and it's the same infrastructure largely. So I could definitely see that in the future, that the whether we would take one of our products and then tokenize it, I think we could consider that, where we felt there was demand for more around the clock trading of those products. And yeah, frankly, there probably would be demand for at least out of hours trading of our ETPs, and tokenizing them and listing them on a digital asset or blockchain-based securities venue would help to solve for that. So watch this space. Let's see. I'm not gonna write anything.
There's no announcement today.
No.
Quite that. Okay. Well, you have to come back on the boat. Yeah. Maybe very last question is what excites you in the digital asset space, in the crypto Web3 space these days?
Oh, good question. Like, I think what I'm encouraged by is that I believe that we're moving away from just seeing crypto as a trading asset, or like, people see Bitcoin as a trading asset, and investors really starting to think about where this should fit in my portfolio. It's not just, I want some exposure to crypto. They're thinking about the allocation within their broader portfolio, and recognizing that not all cryptos are alike, and they won't all fit in the same place. So I think investors are now correctly understanding that, Bitcoin has a certain use case, the store of value. It will sit somewhere different to some altcoins, which are an investment in technology. And that's what we really believe, that we are offering exposure to very early stage technologies, which have risks to them as well, right? Super volatile. And that they belong in growth parts of portfolios alongside, I don't know, AI and biotech and other things like that. And that just is that's great kind of evidence of the maturing market, and the way that people thinking about crypto as a not just as an asset class, but thinking about individual cryptos in their own kind of investment opportunity. And I don't hear people talk as much about, oh, it has no intrinsic value, because it genuinely, I think anything from the big ones that we talked about right down to Dogecoin, for example, have some intrinsic value to them.
Right. And yet, in the case of Dogecoin, it seems you were the first to launch a Doge ETP, to my understanding.
Well, do you know what? I think they're. It's a good question. Maybe we are. And but what I think we're certainly the first to launch with the support of the Dogecoin Foundation, which was great. That, we were selected to be the kind of provider of choice, and it's one that definitely raised a few eyebrows. Because look, to a lot of people, it's a meme coin. It's a little bit. It has been a bit of a joke. It was started as a joke. What I love about it is that it had, from day one, like perfect product market fit. It knew exactly what it was doing. It captured this huge audience that's created this amazing community around it, and that community has grown. And now it's starting to think about real world use cases, particularly in payments. And so as applications are developed, use cases are developed on it, it already has this captive audience that are desperate to go and use it. That's actually fairly unique Bitcoin, I suppose, is the other example where there was a community kind of driven thing initially. But most other chains, they start with this roadmap and this vision, and then they have to work really hard to onboard users, really, and developers. And I think like Dogecoin is the other way around. Today it's still definitely more of a retail investment, but I think once we start to see some of this come to light and to kind of come to market, institutions will also recognize it as a something they want to own in their portfolio.
That's surprising to hear.
Yeah,
it's from the narrative that was super clear now, building a roadmap for Dogecoin, so that they go much beyond the first use case. Thank you very much, Duncan. Maybe very, very last question is, if there's one person we should invite on this podcast,
oh man, I don't think I was prepared for this. Look, I'm just I'm gonna be super biased. I think you would have a great conversation with either our own head of research, Adrian Fritz, or if you want to talk markets and liquidity, I think Alistair, the head of capital markets, would be a great one, I think. And you can do it in French as well.
That's right. We haven't done it in French yet, but we could definitely try. Perfect. Thanks, man. Thanks so much.
Cheers.